Yes, what is a prepayment? Anybody to give us the definition? Madam Betha, a prepaid expense? Mr. Vincent? Yes, when you make a payment in advance, okay? Yes. So since you've paid in advance, there's some money that hasn't been used up. Okay, so if you're in an emergency, you can ask and say, okay, what I've paid in advance, let me just get something back because I need it for this. Okay, and if the person is a good person, they'll give you. But here in Zambia, once you give your landlord in advance, it is gone. Okay, you will never, even though you ask, no, I paid 3 months in advance, can I just get maybe certain portion of that? Find it is gone. Yes. So prepayments, when you make a payment in advance, all right, prepayments, prepaid expenses are treated as a current asset. Okay, because you've paid that money you've paid in advance, since it's not used up, it's like it's still part of your money. Okay. Until the elapsed period passes that money is used, then this current asset gets used up. Okay. So we've got an example here. Okay. In our trial balance, rent 48,000. Additional information, they've told us that there was a prepayment for rent of 6,000. All right. So we have to make some adjustments. Okay, we must make some adjustments so that we account accordingly. All right. So remember, prepayments you deduct from the expense. Okay, you subtract from the expense. And in the balance sheet, it's a current asset. Current asset in the balance sheet. Okay. So from this 45,000, there is a 6,000 which is a prepayment. Okay. And remember, for our financial statements, we're only interested in the expenses incurred for that year. Okay. So this 6,000 prepayment, okay, it's probably for the other year. Okay. So we need to deduct it out from the expense. Okay. We need to deduct it out from this 48,000. All right. So look at this journal entry which is done. This is the adjustment journal entry. Okay. We debit our prepayment 6,000 and we credit our expense 6,000. This debit entry here represents when the current asset which we're going to put in the balance sheet. Remember, assets increase with the debit. So when you debit the prepaid rent expense, this will appear on the balance sheet as a current asset. Then this credit entry, okay, remember, expenses increase with the debit. So whenever you credit an expense, it means you're lowering that expense, okay? So this credit entry of 6,000 is what we're deducting out of this 48,000 here. Okay. So 48 minus 6,000, 42,000. Okay. This is the rent that's for the year. Okay. This is what has to appear in our statement of profit or loss. Under rent expense, it has to be 42,000. Okay. And then in our balance sheet, this 6,000 under current assets, you're going to put it there. Okay. So as you can see here, this is what has been done here. In the statement of profit or loss, under expenses, rent expense, we've deducted the 6,000. Okay, this is supposed to be 42,000, not 12. Okay, 42,000. Then in our balance sheet, under current assets, prepaid rent, 6,000 here. Any questions? Yes, Mr. Vincent. Oh, let me answer your question with T accounts maybe so that I go a bit deeper. Should I go deeper, Mr. Vince? Should I go deep? Okay. So the scenario can be like this, okay? Initially, maybe let's say you paid this company, they paid rent for the whole year, okay? They paid a 48,000, okay? Not knowing that in there, they might have known, yes, there's a prepayment in there, or might have not known there's a prepayment in there, okay? So originally, the first thing that is done when the rent was paid, okay, rent paid, okay. So whenever you're paying for an expense, the original journal entry is what? You debit the expense and you credit cash, right? So we debit rent, the whole amount, 48,000. Okay, then we credit cash, the same amount, 48,000. Okay, the same amount, cash, 48,000. Okay, so on the trial balance, you see rent 48,000. Yeah. So now you figured out, okay, this 48,000 that we've paid, there's actually a prepayment in here. Okay. Maybe the rent that's due for the whole month, the rent for the whole year is 42,000, but you guys paid 48,000. So you realize, okay, from this 48,000, there's actually a prepayment in here. Okay. And once you do your digging in, you find that the prepayment is 6,000. Okay. You've paid 48,000. Out of that 48,000, there is a 6,000 inside. Okay. So when you're preparing your financial statements, you only have to record the expenses that you've incurred. If the expense hasn't yet been incurred, do not record it. Okay. So when this rent reaches 42,000, it's for a full year. Anything above, it's going over a full year. Okay. So originally in the rent account, here the T account for rent, you have 48,000. and you found out, oh, there is a prepayment of 6,000. So this prepayment, we need to remove it. Okay, we need to remove it. This is where this adjusting entry has come in here. Okay, the adjusting entry, we're removing the prepayment. Okay, so as you, which is 6,000, yes, we're removing it from this 48 pin. Okay, so as you can see, this credit entry here, this 6,000. Okay, on the rent expense account, you put here credit 6,000 here. And since it's double entry, this, remember this debit here, the prepaid rent account, P, prepaid rent PR, you debit 6,000 here. So that in your financial statement, 48 minus 6,000, you remain with 42,000 here. Okay, this is the rent for the year. And this is what should be charged on the statement of profit or loss. Then this 6,000 is there. Since we found it's the prepayment, so it's the current asset and it's the one that is going on the balance sheet. Okay. That's why for a prepayment, you subtract from the expense. As you can see here in the T account, when we credited here, we're subtracting. Okay. You subtract from the expense and you record it as a current asset in the balance sheet. As you can see, we opened the prepaid rent account here. This is the asset account here, 6,000 here. Yes. Any questions? So what you must remember from these colleagues, prepayments in your financial statement, you subtract from the expense. And in the balance sheet, you it as a current liability. So let me give a question here so that we try, so that we see if we've all grasped the concept. Because remember, we can say, okay, I've understood, but when you meet a financial statement question, you find you forget what I was telling you. Okay, so okay, on your balance, on the trial balance, you find rent expense 150,000. On additional information, and there was a prepayment of 10,000 kwacha. Okay. So the question is, how much should appear in the statement of profit or loss as rent expense and in the balance sheet as a prepayment? Now they won't bring the question like this to you, okay? But we have to start from the basics, okay? And rent. So how much should appear in the statement of profit or loss as rent expense and in the balance sheet as current, yeah, and in the balance sheet. So before we start answering, so originally this is what happened. Okay. Probably this 150,000, okay, could have been paid at the beginning of the year. You pay the whole rent. You might have paid it even in the middle of the year. Okay, you might have paid for rent in the middle of the year. Okay. So here you don't need to calculate for yourself to find out how much the prepayment is. It's already been calculated for you. Okay. So originally, what is the original journal entry when this 150,000 is paid? What's the journal entry? Debit rent 150,000. This is not part of the question, but I just want you to see the whole picture, okay? You debit rent 150,000, you credit cash 150,000, okay? Okay, so in the rent account, when you open the rent T account, rent, you have there 150,000 sitting here. Now, in this 150,000, there is a prepayment which you need to remove. So now this is the question. So, yes, let us solve how much should appear in the statement of profit or loss and how much should appear in the balance sheet as a. We can answer it as a class, okay? Yes. So, Mr. Vincent, how much should appear in the statement of profit or loss for rent expense? Yes. Remember, just look at this information here, these two figures here. Hmm. So you have answered parallel. Huh. Hmm. Okay, but thanks for that. Anybody? Here I'm just asking how much should I pay, okay, on the statement of profit or loss. Okay. How much should I pay? Yes. Yes. 140,000 should appear on the statement of profit or loss. Okay. And then on the balance sheet, how much should appear under prepaid rent as a current asset? 10,000. Yes. 10,000. Yes. So remember, the whole concept here is you deduct the prepayment from the expense and you include it as a current asset in the balance sheet. So let us see the whole picture here, okay? So we've already found that we've got a prepayment of 10,000, which we need to remove from this 150,000. So you're adjusting journal entry. They'll rarely ask you to put the adjusting journal entry, but it's good to know it. Okay. The adjusting journal entry, you debit the prepaid expense because you are recognizing it as a current asset. Okay. So you debit 10,000, meaning you open up the prepaid rent account here. Prepaid rent, prepaid rent account. You debit, it's 10,000 here. Then you credit the rent expense, 10,000. As I said, what I just said, subtract the prepayment from the expense and add it to the balance sheet. This is what this adjusting entry is telling us, okay? The adjusting entry is telling us exactly that. Deduct the prepayment from the expense and include it in the balance sheet. Okay, so you rent expense, you credit 10,000. Okay, so the rent expense here, you put 10,000 here. 150 minus 10,000, 140,000. This is what has to appear in the statement of profit or loss, 140,000. And then what appears in the balance sheet, this 10,000 there. Okay, let me repeat myself again. This adjusting entry is basically telling us how we deal with prepaid expenses. We say prepaid expenses, you deduct from the expense, which is represented by this credit entry here, and you include that prepaid expense as a current asset, which is represented by the debit entry here. Okay? Yes. Now, the good thing is in the financial statement questions, you won't need to show this adjusting entry or this original entry here or these T accounts. You just have to remember, deduct the expense and include it as a current asset in the balance sheet.